All right, guys, welcome back to the channel. So let's talk about what happened today. So today I lost some money trying to do an option trade on ticker symbol TSM. So yesterday we had some CPI information come out and the markets were moving kind of choppy. That was the first thing. Usually when the market's choppy, I have a tendency to stay away. I decided again to risk, minimal $400. So my plan was to go in with 200 on the first trade, and then if that works out, I would put the other 200 on another trade. So the way that works is when you're in, let's say that's the cash that you decide to put up, right? If you go ahead and you say you buy $200 worth of options, those funds are not going to be, when you sell, those funds are not immediately back in your account when you're working with a cash account. With Robinhood, it takes the next day for it to be available. So when you buy that $200 worth of options, that money is gone for the day until the next business day. So the plan was to buy 200 and then dip into the next option and then spend the other 200, hoping for anywhere from, I would say, a minimum of like 20% return on my money. So yesterday the market was moving choppy and against my better judgment. Usually when it's like that, I stay away. But then I started trading with my ego and emotions because, I've been successful at trading TSM for the last couple of days. So I said, you know what, let me go ahead and try. So let's scroll down and let's take a look at the first trade that I did. So we'll go down here to history and we're going to go ahead and we're going to click show. And then if we look here, it shows I have a couple of trades. So the first trade that I took was actually this one right here. So I ended up putting up $232 for 4 contracts. And this was for the 152 call. The strike was 412, which is Friday. If we click on it, it pretty much gives you the information here. It just shows, the contracts. I paid 58 for each contract. All right. And I got 4 and it was filled. We go back up, it started going up and then it just got real choppy on me and I started to lose. So I actually got out here. When you see I sold for 160, all 4 contracts. So I bought 58 and I end up selling for, what is this, 40? So I end up losing like, what is that, like $18? So that's definitely not an acceptable loss. But it's better to cut your losses than try to push and hope that it's going to go in the direction, because then now you're just going off emotions. I should have stayed away from this trade altogether, but I'm showing you guys this just to get the mentality of like how to avoid putting yourself in a position where you're trading with emotions. So I got out here at 160. So I end up losing, what is that, $72 on that trade. So the next one I got in was, this was the other 200 now. So I got in on a put because I noticed it started to go down. It fell below the average line. And we got in on this 195 for 5 contracts at 39 a contract. As you guys can see here, 39, quantity 5, and this is a put. And it started to bear fruit, and I sold 3 contracts here, right? So I got in at 39. I sold 3 contracts at 49. And I was like, good. It keeps going down. It's still below the average. I'm going to let the other 2 contracts run. So at this point, like I said, I bought it 39, 49, so I'm up here, right? I end up watching this. It kept running. And at one point, I was really up, and I'm like, oh, let me get out. And I said, no, it looks like it's going down more. And what happens? It turns around again. So at this point, I was really profitable on these last two, but then, greed took over, or ego, or whatever you want to call it. Long story short, at one point it just started to go down rapidly, so I ended up selling. I ended up selling these two at 35, so I made 70. So if we go ahead and we add everything up here, I would say for the day I end up losing $50 exactly. So it's a small loss because I was still able to manage it. But in the grand scheme of things, that's a little bit over 10% of the working capital that I decided to put up, which was 400. So the message with this is, guys, don't trade with emotions. If the market is choppy or moving sideways, I would stay away. That's just me personally. If there's no direct trend, I would stay out of it because you can end up losing or getting stuck in a trade. And the longer you stay in the trade, especially if the expiration date is close, then you just start experiencing like IV crush. And that goes really, really horrible. That $70 that I closed out yesterday, if I probably left it for today, I would have been crushed. So the contract expires, like I said, on Friday. So it's just another day. It's another lesson. You're going to have losses when you're trading. The key is to manage your risk, keep your losses as small as possible, and don't get greedy. 20, 30%, take those, especially on days where it's choppy. I'm not saying if there's a super trend and it keeps going up, take 20%. If it's running, let it run, but you also got to be smart. Look for your candles, especially when you see like, doji candles forming or candles with like a long wick at the end. That's an indication that it's about to reverse. Another mistake I made on the final two options, the final two puts that I had running, was that I actually stepped away from my computer. I got cocky. I was like, oh, I could go to the gym now. And I was watching it on my phone. Well, that dip happened in between me doing a set. You know, I got done with my set, got back, sat down, look at the phone. I'm like, oh, snap. And I sold. But by then, I pretty much lost the gains that I had on those two puts. So don't get cocky. Keep your fundamentals together. And, don't get greedy with your trades. All right. All right, guys. Thank you so much for watching today. I hope you found this information useful. If you did, please go ahead, like and subscribe. And more importantly, share the video with a family member or friend. Thanks again for watching the video. Y'all have a blessed day. Peace.